Hey everyone, so we're back, and I'm very happy to have the founder of Unslashed with me. So, as a quick reminder for those of you who don't know, Unslashed is probably one of our first big partnership in the space since we released V2 last year. It's been a very fruitful and fun partnership. Marwan has a great mind, and it's been a lot of fun working with him. And so I'm very happy to present him today. And maybe we can just kick off, Marwan, with just a short introduction about yourself and a little bit about why you founded Unslashed and what you want to achieve.
Sure. Well, happy to be here with you for another summit. Unslashed basically was created initially. We were focused on slashing risk, like the whole thought process that we had in 2019, which was also the time where I first reached out to you, telling you like, yeah, we are working on this thing for insurance, but we think that asset management is a very important component of it, and we don't want to build the whole thing because it doesn't make sense. We'd like to integrate with Melonport, which became Enzyme afterwards. Or Melon. I don't remember. Like, is it Melon protocol?
Enzyme, yeah.
Yeah. All right. So the originally, like, we were focusing on slashing risk for proof of stake blockchains, and the reason why we were focusing on that is that there was room to diversify over a lot of different validators, a lot of different networks, and to have something that makes sense from an insurance product point of view. And as we were working on it, and as DeFi started really exploding, we decided that since we have a protocol that can do insurance, we can do a lot of different insurance products, and we don't need to stick in and on slashing alone. So that was like basically the birth of Unslashed. And since then, what happened is that we went through a dev process. We launched in early 2020, early actually 2021, late 2020. We integrated with Enzyme as basically what was scheduled, and we are now offering basically two types of people the opportunity to use Unslashed, which is, on one hand we have underwriters, on the other hand we have cover buyers.
Yeah, I want to drill into those two user types, because I think when people think about an insurance protocol, the first thing they think about is, oh, great, I can buy insurance on a protocol that maybe I don't fully trust. But there's a whole other side, which I think is a lot less obvious, which I think would be really useful for you to go into more detail on. I think your flagship product today is the Spartan bucket. I think I was probably one of the first people to provide collateral there, and it's grown immensely since. But maybe you can talk to us a little bit about, as a user, if you're providing collateral to an insurance protocol in DeFi, in Unslash specifically, or to the Spartan bucket specifically, what are you doing exactly, and what is the upside for you?
Yeah. So you're totally right. So basically, there are two types of users. There are lots of users who look at it from the insurance or the policy buying perspective, and there are other users who actually see it as an opportunity to earn yield. So right now we have one what we call structured insurance product, which is the Spartan bucket. So the Spartan bucket is a collection of different policies, and when someone provides capital to the Spartan bucket, it allows them basically to underwrite all the policies that are part of it. So they start earning yield from the premiums that are paid by the cover buyers, and they also earn yield from the asset management that is done on Enzyme and the different asset management strategies that can be implemented there. The idea is also not to have just one bucket, but to have several buckets. So there is a possibility to have different types of buckets with different risks or different base currencies. Right now, the Spartan bucket is based on ETH mainly. So basically, it allows to earn a yield on ETH, and the objective is to have other buckets that are going to be stablecoin based, for example, or can be BTC based, or having BTC as their base currency. And the idea is really like to stay in that kind of logic of structuring products, and to have more and more ways to structure different types of products that have different types of risk exposures, and at the same time provide different types of yields. So that's the spirit, and that's the way the protocol was designed initially.
Okay, cool. And Marouane, talk us through the split at the moment. So you mentioned that there is, you're earning yields on the asset management part with your bridge to Enzyme. You're obviously earning as a collateral provider. You're also earning yield based on the premiums that you're selling. And the last part is there's a USF program going on where you're incentivized through the waves. If you are sort of, the earlier you are into it, the more you can accumulate in USF and further align your interest with the protocol. Do you want to kind of talk about that split a little bit, what it's looked like historically and what it's going to look like in future?
Sure. The split historically comes down to about like 50-50 or 40-40-20, meaning that we have 40% of the yield that comes from the premiums paid by the cover buyers, 40% that is coming from the asset management, 20% that is coming from the incentives with the USF tokens that are distributed. Overall, that basically based on what is happening on the market and the different opportunities to produce yield, there is a possibility to increase the yield on the asset management side. There's also an opportunity to increase the yield on the premium side by listing new policies, selling more insurance, etc. So currently the base yield is basically between 10 and 12%. It can go up in some cases, and like it can reach 15, 18% on pure ETH. And it also depends a little bit on the market. The part that doesn't depend on the market, so that is really great, is the premiums, because the premiums are really related to the cover buying. And the cover buying, basically, when we are working with DAOs, when we have Paraswap, for example, who bought an insurance for 6,500 ETH or 7,000 ETH, that doesn't depend on the market. That's there, and it's used to cover Paraswap and the Paraswap users in case there is an issue with Paraswap smart contracts. And same goes with all the different policies and all the different partnerships that we had with a lot of protocols out there. And that's where we can see like that basically there is kind of an uncorrelated yield that can be created there with the asset management on one hand and the premiums on the other.
Absolutely, yeah. I think I still remember that time in the end of 2019 when you got in touch with me, and I had the privilege of having an early look at your white paper. And the thing that impressed me the most is how carefully you had thought through all of these segments, as well as balancing the risk management, etc. And I bring this up now because I just saw a question in the chat saying, how does Unslashed compare to its competitors? And we can see if you have enough time at the end to answer that, or you want to go back in the chat and write later. But I just think, from day one, you guys have really pioneered the idea of thinking really carefully about leveraging the composability of DeFi into enhancing your yield, thinking carefully through the risk management side of things, leveraging the tokenomics in the best possible way. And also you've been very aggressive. And I think the last time I spoke to you, you were saying that the sale of premiums is annualizing around 6%, 5-6%. And I just think that, this is not just an idea anymore. It's also the execution has just been done so well. So it's nice to see that we went from there to here today. So the next thing I wanted to ask you is, what can users look forward to in terms of changes around the protocol that they should know about, that they should look forward to or be aware of?
Well, right now, basically, we have been like we started listing what we call full stack umbrella policies. We have a couple of these already on the cover side, and it looks like there is a lot of interest there, and we are going to announce a couple other policy listings this week, and we're going to continue in this direction. On the other hand,
I just want to stop you there, because for me, I speak to you regularly enough to know what an umbrella policy is, but to our ecosystem, can you just give like a quick definition of what an umbrella policy is?
An umbrella policy is a policy that covers kind of all the risks that are within a certain exposure that the user has. So, for example, if a user has UST on Encore, we're going to cover the risk of the smart contracts of Encore plus the risk of UST losing the peg, and the losing the peg can be for a lot of different reasons, plus the risk of the Encore oracles, etc. So it's really like basically allowing the user to have a policy that covers everything. Those policies are more expensive, obviously, but they allow basically instead of picking the coverage that one wants, it allows the users basically to just take everything in one shot, and that's something that seems to be interesting. And on the other hand, we're also starting to look into different types of insurance, more like from a financial risk point of view. And that's something that we're going to be pushing in the coming weeks. And that's also like we have been innovating in terms of products. Like we were the first to launch an insurance product against the DPEG, and we were the first to really like model that risk, try to see what is in there. Yeah. And we launched also products for slashing for validators, which were like our original business model. And right now we are looking into a lot of different products that we're going to be pushing in the coming weeks. So I think that's on the one hand. On the other hand, we're going to also push the new buckets, and the new buckets are going to allow to have other types of risk exposure, and they can allow to take different types of positions. I'm trying not to say too much.
I was just letting you go.
Too much, but yeah, like there are also other teams that are starting to look into building on top of Unslash, that want to provide products that have insurance that is integrated by default. So that's also another piece where there is a lot of development and there is a lot of things, that is happening.
I know that that's something we're interested in as well. So very excited to see that. I know that you're following our Sulu release quite closely. I want to ask you, what does the Sulu release mean for Unslashed, for the Spartan bucket, and for your future products? Because I know that you're planning some maintenance on the products, and maybe you can kind of just give a little bit of insight into that.
Well, the Sulu release basically is going to allow us to have a higher yield. That's a very, very important point. The asset management, like with all the integrations that Sulu is going to bring, and the ability to connect super easily to new protocols, we're going to be able to deploy the insurance capital in a lot of different ways, and diversify, and also have a higher yield for the underwriters. And that's super interesting. Well, in order to have the Sulu release, we need to go through a small maintenance period. But the idea is to be able to really maximize what we can do in DeFi while managing the risk exposure for the underwriters, both on the asset management side and on the pure underwriting side. So that's and I've been waiting for Sulu for a long time.
Yeah, all happen. It's a couple of weeks away, and we're very excited to. I know that you will have to update the bridge and prepare for
Yeah.
Sulu. So we will be patiently waiting for you to relaunch the strategies with higher yield. And I think that the end goal here, or the bottom line here, is it's a win for everyone. It's a win for the collateral providers in the Spartan bucket and all the future buckets. It's a win for us, because when products like Unslashed can, or Spartan bucket can offer higher yields, then this attracts more TVL to the Enzyme platform, and it's a really nice circular effect. So we're very excited for those updates to take place and looking forward to it. I think maybe the last thing, you touched on it a little bit, but I was curious, just for the last couple of minutes, to focus on where is the demand for insurance premiums coming from, and where is it not coming from that it should be coming from? And what are the most interesting kind of premiums you've sold in the last few months? Where do you think the future lies? Where do you think you'll be selling future later this year? I know I focus more on the collateral buckets because I feel that that's the less known, part
Yeah,
of Unslashed. But
I agree. Like the capital side is one that we probably need to push more out there, and it's already planned to basically communicate over the fact that we are providing probably one of the best yields or best risk adjusted yields out there on ETH, and we could do the same also on stable coins. The interesting part is that we were focused. We had a thesis from the beginning, which is basically that insurance is not a product that DeFi degens are going to be interested in. So we have a lot of DAOs. We have been working with a lot of DAOs in order to provide them directly with covers and with policies that cover their users. And we are seeing more and more interest on this side. Basically, like so far, what was happening, or over the last year and a half, what was happening was that basically the DeFi projects were telling the users, if you want insurance, you need to buy it by yourself. And we are seeing more and more DAOs taking the step of saying, like, okay, we want to protect our users. We don't want them just to leave them out there without any protection. So we are going to buy insurance the same way. We are doing audits the same way. We are having bug bounties. We are going also to buy insurance in order to cover them in case anything bad happens. And that's from where most of the premiums were coming so far. We also have a certain number of funds who are going to approach us and tell us, okay, I would like insurance for this amount on this type of policy. And they might have some specific needs that we discuss with them.
awesome.
And sorry.
No, go ahead.
And I think that like the demand is going to continue being like DAO to DAO, B2B like for insurance. I don't really see a market for retail so far. Maybe in the future it will change, but so far the retail users tend to really like taking the risk. They're risk on, so the insurance part, like losing money, is part of the game to some extent, and the risk management is basically based on diversity.
Well, on that note, I think it's probably kind of timely to just announce that with the Sulu release in 2 weeks, we will be supporting insurance directly from the Enzyme interface. So both vault managers or users, investors, depositors will have an easy access button to buy insurance protection against the contracts of any of the DeFi protocols they interact with, whether it's Enzyme or the umbrella policies, which would have to be discussed, I think, offline with Unslashed. But we're really, really excited to strengthen and deepen our partnership and relationship with Unslashed on that front. So I think we're out of time,
Yes.
Marouane, but I just want to say also, if anyone wants to leave other questions for Marouane, we will relay them to him, and we'll try and do a Q&A session at the end of tomorrow's session, where we collate the best questions and we'll try and get the answers for you on the last session tomorrow.
Sounds good. All right. Awesome.
Great.
Well,
thanks.
Well, it was great to be with you again.
Great. Take care.